Well, hello everybody. Hello to all our listeners, our YouTube followers, our LinkedIn subscribers, our Facebook followers, and I don't know where else we can be, but we are there. I'm sure we are there. Welcome to the 22nd edition of our Core Talks. My name is Rafael Gonçalves. I'm the communication coordinator for CurConnects, learning a little bit more about private capital markets every single day and trying to bring you guys some education to make our market grow. Today, I have a very, very special guest with me, Nathaniel Dodson, Nate Dodson, if I can call you like that.
Please.
Please, Nate, introduce yourself. The stage is yours.
Well, sounds good. I am the principal over at Crowdfunding Lawyers. Have nearly a 20-year career, really doing just transactional business startups, business M&A, mergers and acquisitions, and real estate. And traditionally, my law firms have really handled everything from the contracts, setting things up, and of course, the financing and the equity. Acquiring crowdfunding lawyers back in 2020, it's a bigger emphasis on the crowdfunding, the equity marketing from a general aspect, which of course is Core Connect's big forte there. So love catching up with Raphael and the rest of the team over there. But beyond just being an attorney at heart, I'm an entrepreneur that works hard and plays even harder. Always enjoy traveling, golf, and all the fun things in life. But it's important to balance the fun with the hard work and the efforts. And so that's really where my passion comes together with helping our clients, helping the people of the United States and abroad really reach their dreams, get their businesses off the ground. And it's always nice that this is where I find my joy in seeing other people's success.
No, that's a very positive view. It's very interesting to listen to someone speak with that kind of passion about being an entrepreneur. I have to ask, what is that animal behind you? The picture, the animal in the picture behind you. There's not an animal behind you. Don't worry.
This is so there's a little story behind it. So I'll tell a short story, I promise.
Please do.
Uh, so it's a painting of a water buffalo that is charging. It was actually in one of my clients' offices, maybe a dozen, 15 years ago. And he had an employee that was an artist, painted all these pictures. And I'm
Wow.
walking through his office, and I just stop and I start cracking up. And I'm like, this bull's doing the I've got a pee dance. And so I'm like, this has to go above the toilet in our house. Like, there's no better place for it. And so, what's it going to cost me? The guy says, well, normally my paintings cost $4,000 or $5,000. And I said, I'm not going to pay $4,000 or $5,000 for a bull trying to do. I'm going to do the pee dance. What's it going to cost me? His response is, what do you got in your pocket? I said, I got $100 on it. Sold. I take a picture of it, and I'm in Phoenix at the time, living in Las Vegas. I took a picture of it, sent it to my wife, said, look at what I got for our home bathroom. I'm so super excited of the pool doing the bull doing the I got a pee dance. And she says, fantastic, can't wait to see you. I load it in the car, drive back to Vegas, and by the time I get there, it's a 4-hour drive. She had every wall in every bathroom in our house covered. Says, I'm sorry, there's just no room here. You're going to have to take it to your office. And now it's been proudly shown in my office for the last dozen years.
That
And
was
so it,
fair. That was low but fair from your wife.
oh, completely. So I get it. And so to this day, proudly shown in every office. It's moved from Las Vegas to Dallas and a few offices in between. It's always there. It's my crown jewel of the
Nice.
I gotta do the pee dance pull. So
That's a great icebreaker. That's a great icebreaker. That's a very warm story. That's a very funny story. I loved it. I loved it, and it's a very nice painting, by the way. I mean, it's a very nice painting. But let's get to work. Let's get to work. I love as much as I love the Buffalo story. We have just finished last week our core summit. We talked about real estate. We talked a lot about solutions and about the market. Nate, could you summarize the opportunities you see in the sector for those who missed it? What kind of advice would you give entrepreneurs and investors regarding real estate in a nutshell?
Real estate in a nutshell, it's really important if you're
It's
getting
tough.
into it.
I know it's tough.
It's tough, but it's unbelievably rewarding. It's created more millionaires in the United States than any other basic type of industry or business ever. So it's a huge thing to learn about and to know and to be in. And it's one of those industries that almost anybody with any sort of net worth can go and buy a rental property, but that only goes so far. And pretty soon you need other capital and you need more money, and it just doesn't end. And that's where you start with the raising capital and getting into more and more deals. But that actually never ends. It doesn't matter if you become that multi-billionaire like Donald Trump, he's still out there raising capital from individuals. Now the individuals have to be like royals and other really high net worth people. But in the real estate industry, it's just a part of life. The only major difference is how much capital you're trying to raise. If it's for $1 million vacation rental or $100 million multifamily and apartment complex, at the end of the day, it doesn't change the fact that is just a necessary part of any real estate business.
Yes, and what I meant about being tough was putting real estate in a nutshell, because saying that you work on real estate is like I work with internet. I mean, it's huge, right?
Definitely. And it's really interesting. There's kind of two different paths for, hey, I want to get into real estate. What should I do? And one path is well, yeah, find something that you know, like, and can afford to do and stick with the path. And that's where people have been building rental portfolios for decades, for years, and building it not just for themselves, but bringing in investors and continuing to expand the rental portfolio. But single family homes, the small rental opportunities, it's always there. Compared to kind of the bigger opportunities, change with the markets. Over the last couple of years, we've seen a massive number of apartment deals happening, but also a lot of ground up construction, storage units. All of these areas have been phenomenal places to target and pursue investing, but the dynamics have more recently changed. The interest rates have been going up. It's turning from this buyer's or seller's market to a buyer's market, but not necessarily all the pricing has reflected that yet. So we're in the middle of a shift where
Hmm.
apartment complexes have been great for the last decade. We may see less growth over the coming next few years, but there's a huge refocus on the single family home, both for vacation rentals as well as building neighborhoods, literally, of rental streets, rental neighborhoods. So it's still creating massive opportunities in some kind of more boring areas like a rental portfolio, yay, but it creates the cash flow. It creates the capital gain opportunities. It creates that wealth succession that can follow you beyond just what can you build to what's there for your kids, for their kids, and how can you help out the investors around you.
Yeah, you said an expression that I believe is key. Create cash flow, right? Because that's I believe that's the big deal about capital formation, as we have been talking about. The cash flow, money is scattered, and as long as we have Reg A, Reg CF, right, you have possibilities for accredited or non-accredited investors. You create this kind of flow, and obviously, investing is not only about this online capital formation and growing and making money. There are risks inside every part of this chain. In every aspect of this flow, we have risks. And as we discussed before, talking about risks isn't as sexy, right, as talking about becoming a digital marketing guru or becoming a millionaire like Donald Trump, or how to become relevant. Do you believe that we, as educators and as companies, we avoid talking about it and we help make risk a gray area?
I'm sorry, I missed you there.
Sorry, sorry.
There you go.
Do you believe that we should talk about risks more often so we don't make it a gray area?
Definitely one of the most important things for people to realize is the extent of what a risk means when you're talking about working with investors. I mean, in the worst case scenario, literally people have gone to jail for lifetimes um, if they're not doing things right. I literally have an ex client that I got drug into a court case that he was abusing investors, meaning lying, taking their funds, and running. Yeah, end up having to literally testify at his trial um, because he ended up waiving the attorney-client confidentiality, something that you should never, ever, ever do. But he waived it. Then I get called to the stand, and this guy he didn't do things properly, and now he's literally in prison for the remainder of his life. In his 60s with a 40-year sentence. He's not going anywhere. And it's because of the risk of him not doing things right. This was a situation where he was told how to do things right and decided not to do it anyways. So, oops, I made a little mistake. I didn't realize it. Securities are a very technical area. It's important to have a team behind you, including the legal team, your accounting team, and your technology, how people are investing, how you're marketing, all of which creates massive risks if it's not done properly. Meaning you're limited on what you can say or do from a marketing aspect. If you have a great team behind you, they're going to make sure that you do it right. From a legal perspective, there's so many ways to go wrong with how to raise capital and how to communicate with your investors that you really shouldn't be just relying on the anybody's attorney. Really make sure that you're dealing with a legal counsel that focuses on and has proficiency in capital raising and securities very specifically. Otherwise, you can trip on your way out and it can cause some massive risk ramifications.
Yeah, I just this morning I read a great piece of content by Sarah Hanks. She wrote it back in February. The SEC is not your mom. I mean, even though there are some people doing things, it doesn't mean that they are legal, and it doesn't mean that you should, right?
Well, at the end of the day, the SEC, they may not be your mom and they may not send you to your room without dinner, but they're really not your enemy either. They
Yeah,
are a regulatory authority that's there to protect the people of the United States, to protect the investors. And it can feel like they're the enemy of the issuer, but
hmm
they really are there to make sure that you're also doing things right, but they're not part of your team. They want to make sure that you're doing things right. And if you don't, they may take action against you as well. So it's important to give them both the respect that they deserve as an authority, but also to realize that they're really there to make sure that things are done right. And if they're not, they are the hammer that can be brought down on you or your company as well.
yeah, I believe this is global. Any regulator, any authority, uh, they are there to help, right? They're there to tell you how to do things. Okay, things they some things are more complicated than others, but still, if you follow, you're a lawyer. If you follow the rules, I mean, it's always right.
Yeah, you would hope so. But even as a lawyer or raising capital, I
Hmm
do my own projects as well. getting that phone call and you look at the caller ID, and I recognize the SEC's phone numbers, like that feeling deep in your heart with, oh my God, what went wrong? What happened? Where are we at? Oh my God, who's going to jail now? It's a real feeling that everybody always gets. It's just human nature. But the reality is most of the time they're reaching out, oh, we're just checking in on this, that, or the other. It's when you get a letter saying, we're going to subpoena this information, or we're opening up an investigation, that's the time to start to be a little bit more concerned. But as long as you did everything that your team, from Core Connects to your CPA to your securities and attorney, has been telling you to do along the way, there's really, it shouldn't be a gray area, fear of risks. You should have confidence that you're doing everything right throughout the process.
Yes, yes. At CarConnect, we have been saying that 2023 is the year of trust and compliance. We have had some issues. The market has seen some issues regarding cryptocurrencies, and I mean it's a developing market. We're still going to get a lot of things right and wrong. We're going to see a lot of people showing and disappearing, a lot of companies disappearing and new ones coming. Uh, but what are the risks that you as a lawyer see that came along online capital formation? Because now you don't have to, because before the Jobs Act, you had to travel and you had to be inside meetings and you had to shake hands and you had to raise money. Now you can just with the solutions like CarConnect, you can just raise money on your website. What kind of different risks has it brought, in your opinion?
In my opinion, it actually lowered the risks, and lowered the risk both for the investors as well as the issuers by including third party compliance in some way, shape, or form. Traditionally, before the Jobs Act, we had the Regulation D 506 was kind of the standard private offering strategy. And other than filing a Reg D notice with the SEC in the States, it was between the issuer and the investor, and nobody else was involved. And oftentimes could literally see that, okay, there something doesn't smell right about this deal, but there's nobody else that is looking into it. Now, with the advent of the online crowdfunding, with Regulation A, most often there's a broker dealer involved, making sure that things are going well or properly. With Regulation CF, Regulation Crowdfunding, there's a crowdfunding portal that's like broker dealer light. They have suitability responsibilities, they have compliance responsibilities, making sure that the capital raise process goes right. And then, even with that traditional Regulation D 506, 506B is still a standard. I mean, it is the same risk as it always was. However, it gets limited by the fact that you can't go online, generally solicit and look for capital all over the place. But then with these Regulation D 506C, it's at least limiting the potential investors to only accredited investors, that there's actually the third party verifications, or there is a verification that they meet the accredited investor level. So even though there may not be somebody digging into the documentation, there's almost like a built-in assumption that as long as third parties are getting involved, that there's an additional level of protection of, if I ask you for your CPA's contact to say, hey, are you accredited, or your lawyer or your financial advisor, and you go and talk to your professional about it, there's a built-in assumption that to a certain extent, there's also saying, well, what are you investing in and what do you know about? At least in my professional opinion, I believe that that's why the SEC has said the third party verification from CPAs, other lawyers, and financial advisors is sufficient, not just because of the knowledge of the accreditation, but also the experience and knowledge in the investment industry in the whole.
Yeah, yes, yes. That's very interesting, especially when you mentioned about the broker dealer's role. I mean, in raise when they're necessary. It's important to have trustworthy partners, right? And it's very interesting when you think about how online capital formation reduces risks, because we think that anyone can just have a website and it's very easy to just insert a credit card here, be a partner, be a shareholder. But when things are done compliantly, of course, issuers are protected as well as investors, right? But this online capital formation alone, it does not solve these risk issues, these trust issues, or compliance issues, right? Because they have to be taken into consideration throughout the whole process. So how, you already mentioned broker dealers. So how do these other players, like lawyers, like auditors, broker dealers, how can they help creating this culture of assessing risks properly?
Well, I can tell you from a legal aspect, at the very least, um, we don't get involved with scams. It's a kind of a judgment call, a professional call on we want to see good happen in the industry. And not all attorneys have that same approach. But I can say that being in the industry and doing it for so long, especially headquartered in Las Vegas for the first decade of doing deals, I saw a lot of potential scams and a lot of potential issues that, everybody has a right to legal representation for somebody to get their back. But at the end of the day, it's not good for society to have these scams or these weak investment offerings really running around. So I saw my job in part as an attorney to make sure that I'm not creating negative influence in the investment industry. And so that kind of leads us to today. If it is a problematic project, we have a heart to heart with the issuers, with our clients, saying, okay, if you're really trying to do this, we may not be the right attorney for you, but here's the issues and here are the unnecessary risks that you're putting the investors into. Because the way that we really look at it is, if there's a problem with the deal and if there's losses for investors, they may ultimately sue the issuer and drag in the broker dealers, the lawyers, the accountants. Everybody involved can be named in lawsuits. And so it's important for our own liabilities for the entire team to make sure that only good product, only good investments are getting out there into the industry. So, that self-reflection of our own risk is a good reason why the lawyers, the accountants, and the broker dealers are there to make sure that it's a clean industry, at least as clean as we can make it.
Yes, yes, and of course evolving because the Jobs Act is about to become 11-year old, right? An 11-year-old regulation. So things started to change, and we are definitely reaching a different maturity level over the past years, right? From when I joined CarConnex 1 year ago till now, I have seen a lot of things changing and growing and evolving, and that's part of the flow that you just mentioned, right? Some minutes ago. Uh, Things grow, things mature, people learn, and hopefully people grow, companies grow as well, right? And
Definitely.
now let's think from the entrepreneur's perspective. We already talked a little bit about risks and about doing things right and about relying on your CPA and our broker dealer, auditors, lawyers. So you have a successful business. You're you're growing, you're raising money, you're selling, you raise their money. Uh, when is it time, in your opinion, to think about your exits as an entrepreneur? Maintain property, let go. Should you just invest in another business? How do you feel about that?
Um, when it comes to, and it's different for real estate versus starting a business. Speaking of real estate,
Definitely,
I mean,
yes.
the market controls, and whether or not you're in a great asset or not a great asset, about every 3 years or the major changes in the market, it's important to reevaluate, are you in the right place for the coming future? As an example, construction and multifamily is exactly the right place to be for the last decade. Is it the right place to be for the next decade? And that's where it doesn't really even matter what's going on through your business life cycle, through your real estate career. It's just a fact of the matter that the economy changes, the types of real estate opportunities that it's the place to be, it changes every year or two. So it's a constant evaluation. Am I focused and am I investing in the right place, not just for what's happened, but looking into the future? And when it comes to your own business, when should you be thinking about an exit? As soon as your business is running without you. And that's actually a big thing to think about from a valuation standpoint. If I start a business and the business relies on me to work in the business and it cannot operate without me being involved, the value of it just isn't there. But if I can systematize, build a team, build the staff where the business will go on without me. My first law firm, Dodson Legal Group, I actually have zero involvement with it anymore. It's been running and operating for, I think it's been 18 years now. And I love to see what it's doing and what is happening with it, but I'm not involved. There's staff in there, there's systems happening, there's attorneys that are handling the transactions and the business. So when's the right time? It was actually a long time ago, but now I can just let it go forward. For the average entrepreneur, as soon as it's running without you and profitable without you, you'll be getting the best multiple on the valuation. And even if you sell to look at new opportunities, to look at something else, oftentimes there's a year, 2 years, maybe up to 3 year tie in with your business, even after you sell. So you're maximizing the potential sale price by systematizing and streamlining everything. But you have to plan ahead, knowing that any buyer who doesn't know how to operate the business will want you to be involved for at least some time period afterwards as well.
Oh, yeah, that's very interesting to have the idea of creating a business and make it run without you, and then you can let go. Uh, and that's especially true for serial entrepreneurs, right? Because you see a problem, you raise your capital, you create your company, you solve that problem, then you can think about something else, right?
Exactly. What's the next problem? I mean, it's the exact same thing as what we've been doing. I got my old law firm, Dodson Legal Group, running without me. Then I acquired Crowdfunding Lawyers that had no systems, no scalability to it. And that's exactly what we've done, is implementing the team-based approach where now it really can run without me or any one particular people being involved. And then it just continues to scale and grow from there. So it across the board, it's about the scaling as well as the systemization.
Yeah, and the risk, as we began speaking about, talking about risk, risk is like is something you get used to, right? Oh, I like running risks. I mean, you have to if you're an entrepreneur, right?
Yeah, I mean it's risk benefit
Yeah, it's
or the
like
cost benefit
adrenaline,
analysis.
right? You need to have it running through your veins, right?
Without a doubt, it is a risk loving area to focus your life in. I started my career really in Las Vegas, gambling mecca. And I kind of see it always as, whether or not you're investing in the stock market, investing into real estate, or investing into your own business, there's a level of risk that you want to be able to minimize it. But at the end of the day, the higher potential risk, the higher potential benefits. So you do have to learn to make the educated statistic craps roll when it makes the right sense.
Yeah, that sounds reasonable. That sounds reasonable and fair enough. Fair enough, because yeah, especially in Vegas, it's a very tempting place to be, right? When you talk about Vegas and entrepreneurship, yeah, adrenaline is all over it. I can smell it from here. So I believe we're wrapping up. We're already reaching half an hour, a little bit above half an hour. We started a little bit late. I'm sorry. We had technical issues, everyone. Nate, if you want to leave your final thoughts, if you want to say your goodbyes and ask people to follow you on LinkedIn and check your website, feel free, please.
Well, sounds good. I think at the end of the day, the biggest thing to think about is, what do you want your future to be? Either you can get a job, join a great team, and you have a little bit more stability, but your financial growth may be capped. It's just the way that getting a job may be. Being an entrepreneur, it removes that cap on your family finances. Raising capital and relying on OPM, other people's money, allows you to blow past the limitations of your own financial limitations. So step one is, for your financial success, is to remove the time barriers. That means that you're not just working on the hour. Step two is make sure that you can grow in an ongoing basis. And you have a cap on the amount of money that you have, but the investors that are out there, as long as you have a good business, will help support you through that. So that combination of do your own thing, know how to learn how to raise capital efficiently and effectively, can really open up those multimillionaire opportunities for everybody listening.
That's great. That's great to know. And we at Car Connects, we can definitely help you. We have the largest libraries on Reg A, Reg CF, Reg D, and Reg S. On our blog, it's completely free. You can just browse. You have our website, coresummit.io. Nate's contacts are there. All our speakers are there. You can just reach out to them. You can just check their LinkedIn profiles, their company bios, whatever. It's all there available for everyone. And we are also here on LinkedIn, YouTube, Spotify. You can ping us. You can listen to it whenever you want, and you can follow us. And we are here. We will be here, and I'll see you guys next week. Thank you, Nate. Thanks for the opportunity. I love talking to you again, man.